Hey guys, so in this video we are going to go over back testing. So let's say you want to pick a pair and you want to test out the strategy and figure out how to take an entry from zone to zone. So you can pick any chart that you want in on any time frame. So let's start with the 4 hour. Let's say we want to trade this area, we see an M pattern, okay? So let's just replay what happens. We're not going to look to see what happens here. We're just going to look at structure right here. So what ends up happening is, let's say we take an entry at the very top, so where this M pattern formed, okay? So let's say we had an entry here. So what we want to do is mark up a level right here. This is where price failed to go above, and it also created an M pattern / double top. So once an M pattern forms, it starts to reverse, and we have minor structure right here. Okay. So what ends up happening is we also have structure right here. Let's go on the daily time frame. Like going on the higher time frames to see like what exactly is happening. Okay, so we have a level of rejection in this area, and we had a huge impulse for quite some time, so now we're correcting. So we have a major level right in this area here. Okay, so if we drop down on the four hour time frame, we can just adjust that just because it's broken up into 4 hour time frames. Or sorry, 4 hour candles. Okay. So by the way, when it's a live trade, it will say down here, it'll say the time limit. So for example, like when we go on Euro USD, it'll say that the hour candle, the hour candle is closing in 31 minutes. The 4 hour candle is closing in 1 hour and 31 minutes. The daily candle is closing in 17 hours and 31 minutes. So it's kind of a time limit, and you can see, okay, when is the 1 hour candle going to close? When is the 30 minute? When is the 8 hour? Stuff like that. So I just wanted to make sure that you know that. So back to GBP. Oh, I have to go back to find it now. Always does that. Back to GBP where we had that. Okay, so it's right here. We ended up just doing right here. Okay. So this is our level of rejection right here, a major one, and we also see that on the daily time frame. So this is around 128.5, 128.3, okay? So what ends up happening is, let's say you forget or didn't watch this happen. So let's say the M pattern forms and then it starts to correct structure, and let's say it respects structure and exhausts. You can take an entry when that happens. So some people, when they look at the market, they think, oh, okay, I missed the entry, I'm just going to get in and get in. And so they get in and then it starts to reverse. So you always want to make sure that you're taking your entry off that major zone. I've repeated that like a million times, but I'm going to keep reminding you, just so you're not taking it out of nowhere and you're just taking it in the middle of God knows what. Okay, so anyways, so let's see if price corrects first. I didn't really look at what was happening. I just quickly backed it up. Okay, so price comes up to test structure, and we are on the 4 hour time frame. So when we look on the 1 hour, we can see that it tested here, came up, closed below. So since we saw these two rejections, again, you can get that precise entry on the 30 minute. It tried to go up. There was a failed retest to continue up, so it closed bearish, then tested, and then went down. So like I said, around this level is where you could take a sell. So around 131.5 or 131.4 because it clearly failed to break above. So what you can do is you can say, okay, I'm going to take a sell at 131.5. Again, we're looking at, or let's just go in between. Let's say you take a sell at 131.450 and your stop loss is right above. So let's say 30 pips. So I like to keep mine wide when I first enter just because it can spike up and the market makers are absorbing those orders. They're taking stop losses out. So you want to make sure it's at a decent level. Again, looking at the higher time frames, when you see this correction, you can lower it and you can make it smaller, but I like keeping it wider, but that's totally up to you, whatever you want to do. So just don't get stopped out. Like, you need to make sure the trade can breathe, basically. That's what it comes down to. Okay, so you can see that it's not breaking above. It tested broken structure. So let's see what happens. So we have a minor rejection here in this area. Okay, so price failed to go below this. So this is only, it's almost a 1 to 3. If you made your stop loss a little bit closer, if you entered on lower time frames, then it'd be a 1 to 3. But still, that's 85 pips. So let's see what happens here. Okay, so it comes again, tries to break above, but fails. Speed this up a bit. Okay, then starts dropping, breaks through structure, comes up. So this is the tricky part here. So we can see that there's rejection here. Market comes up, tests multiple times, okay? So when you look on the 30-minute, it's just ranging, but there's no bearish momentum. So on the 1 hour, it's looking like it's exhausting, but on the 30-minute, you can see that it's just ranging in the zone. It's having a hard time still breaking. It keeps wicking. So eventually, that's going to go up and correct. Does that mean it's going to come up all the way up to the entry? No. What you can do is add another confluence. So you can add this trend line. Okay? So let's just see what happens. Okay, so what ends up happening, breaks below, then comes up again, tests, respects, goes down. I mean, sometimes you're going to get these trades. It's not going to be the perfect trade where you just enter and it just drops forever, or you just enter and it rises forever. Like, this shit happens in the market and you need to be prepared for it, but you need to also just pay attention to what it's telling you. And then also looking at DXY. So finally it starts to tank. It tried to break above so many times, but it failed to. There wasn't enough buy orders in the market, so sellers took control, came up, and exhausted right here, okay? So our next structure to take profit would be, we have minor structure in this area right here. So what we can do is just highlight it. Okay, so what ends up happening is that price is around 129.350, 129.4. So what ends up happening is it rejects it. So our first take profit would be in this area. Okay, so let's just see what happens. If it continues to correct and fall, then our second take profit would be down here. Okay, so it's supporting this zone. Breaking, and then full force down. Okay, so it gets to, instead of that low, it gets to around here, around 128,555. So it was about, I think, 10 pips closer, or 20 pips closer than expected. But then let's just see. Okay, so it's ranging around the zone, trying to break. Continues down again. And touches the target. Okay, so the first target was 128,400. So then we drag it here. And we go profit level 128,400. Okay, so it ends up going a little bit lower and then starts rejecting. So just from that, we have a 1 to 9 risking 30 pips to make 305. And again, dropping down on the lower time frame, you can get a smaller entry when you see that pattern forming and you see the wick rejections. So again, that's all you have to do is mark up the zones, exactly what it's showing. So there is, like I said, there's minor and there's major zones. So the major are on the top and the minor are in between, but they do respect it and move from zone to zone. So you just have to watch and see what happens. So since this is a major zone, and since technically we're still in an uptrend and this is a correction, we can start looking for buys in this area. Okay, so since it rejected here, we can jump down on the 30-minute and we can take an entry like right where this exhaustion is. So it couldn't break above the 128.4. So our target was 128.4, but we can buy around 128.4 and then have a stop loss basically right below the 300. So this one can be a little bit tight, but again, I like doing a bit larger stop losses just in case. So guys, sometimes I do 20 on 30-minute, but again, I like to keep it like 25, 30, 40. So again, let's just do 30 because I want to get avoided I want to avoid getting stopped out, okay? Okay, so now this becomes resistance. This becomes resistance. Okay, so let's just see. First target's here. 129.4. Let's see. Okay, so it might come down and test. Oh, no, it didn't. Okay, so we got our first target. So then it completely rejects. So I thought it was going to come down for a second touch, but what ended up happening is it exhausted. 15-minute again, you can see that reversal, hit our target and then reversed. So again, just from this 1 to 3, about 100 pips. Just off this level, okay? So as you see it reversing, you can either, like I said, you can set your take profit to that 129.4, or what you can do is take some profit. So if you have a couple entries on here, you can take 2 entries and then hold, whatever you want to do. Like, it's totally up to you. Like, you make your own trading plan, whatever works for you and whatever is consistent. So what ends up happening is it rejects that 129.4, then comes back down to test. So let's see if it respects. Let's see if it makes a double bottom. Okay, so it's trying to break below the zone. Okay, so it tries to break below. Then what ends up happening is it reverses, comes back above this zone, comes to the 129.4-ish area, and starts to break above. Okay, so realistically speaking, since this reversed, let's say you ended up taking a sell because you saw it was reversing, that's fine. But again, you just have to watch and see what's happening. So it ended up testing structure to come down. However, there wasn't enough sell orders in the market, so bulls pushed it back up. And what ended up happening is it just, sometimes there's no retest on GBP pairs. Like sometimes they just literally rocket or tank, vice versa. So this just completely went to our target at the 129.4 area, then corrected, ended up testing this minor structure, and then completely went to the next target. So even if you initially miss this buy, what you can do, honestly, even you could catch a buy at this next bullish candle, but let's say you miss this whole move, just wait for the correction and take the buy up to the next target. As long as you see exhaustion like this, where you say, okay, there's not enough bears in the market, it's not closing below the 129 level, then it might reverse to our next target. That's it. You got to have confidence though in your trading. That's the biggest thing, because a lot of people doubt themselves and they just don't enter. Even though they see it, they just don't enter it because they're scared. My advice on that is take a low lot. Like if you use a 0.50 or 0.30, if you're unsure of a trade or not confident, take a low lot. As long as you're following market structure and following where the market is taking you in the zones, like 90% of the time you're good. Okay, so it's just a matter of literally not doubting yourself. With psychology, it's like 95% of trading. So the rest is skill, but that's like literally 5 to 10% is skill and the rest is psychology. So you gotta do whatever you can. Like you gotta read books on psychology, on your mindset. It really, really helps. But also time helps. Like I probably developed and had like my emotions under control after 3 years. So it takes a while, but again, everyone's different. It all depends. So let's say you took the buy here at structure 129. Because it didn't close it below. And let's say you put the stop loss like right here, just below, just in case. 30 pip stop. Next target is here, which is a 1 to 5 ratio. And so if it ends up correcting and then going up, we're looking at targets around here and here. So let's just extend them. Okay, let's see. Okay, so it starts to correct and then it ends up ranging, so it's not breaking above. Then it comes up to structure, tests, and continues. Again, this is tricky. So you're freaking out because it's going up and down, ranging against the zone. Then it drops, you're thinking, oh no, it's gonna come, I'm gonna get out. But again, it's just correcting off that structure. Literally, just correcting. Then we have a reversal, goes up to the zone, comes up and tests, and then breaks above. Okay, so just gotta watch and see what it's telling you, that's all. So yeah, breaks above, tests, then continues all the way up. Okay, so again, it didn't come close to our entry. So it was 68 pips away from our entry. So don't just get out because you see it correcting. Like you gotta make sure you're watching it. By all means, you can take that first target and take it for 164 pips, but the longer you hold a trade, the better, because like I said, the next target would be here, ended up breaking. The next target here, ended up breaking. That's 300 pips, guys. So 1-to-9 ratio. So that's how you do it. So again, going back, this is how you back test. Just go pick a random part of the chart and go to the 4-hour and mark it up and say, okay, this is what I think. Back it up with the replay button on TradingView. You have to have a membership on it. So it's $10 a month. I mean, it really helps with back testing. So up to you. But go back in the chart, rewind it, point out the zones, figure out your entry, your target, stuff like that, and see how your progress is on that. But it takes a lot of time and a lot of practice. Okay, so if you guys have any questions on this video, let me know.